Hello, everyone, and welcome to a new episode of Merrill's Monday Morning Market Madness. Coming at you today with some updates regarding the Phoenix housing market. And I'm joined with special guest star Terry Cottle from the team. Welcome, Terry. Thanks for being on today.
Oh, it's my pleasure. I've been looking forward to it.
Yep, absolutely. So today we are going to be talking a lot about month's supply of inventory. If you've watched any of our previous episodes, you'll know that we begin every episode by looking at the month's supply of inventory for the entire market. So right now we have active on the market 18,729 listings. There's 8,588 homes that have closed in the past 30 days. And there are, I'm sorry, I just totally screwed that up. 8,588 homes that are pending, 5,514 homes that have closed in the past 30 days. So the month's supply of inventory, we're just taking the active listing count and dividing it by how many homes sold in the last 30 days, giving us a current month supply of inventory of 3.40. Now, the month supply of inventory a week ago was 3.19. So that number is continuing to rise. The reason why it's important, the reason why I lead every episode with the month supply of inventory is it gives you a reference point for how hot the market is. To give you an idea, at the hottest part of me tracking the month supply of inventory, the lowest we ever saw it was a 0.4. Okay,
not even half a month.
So if you were to imagine no homes are allowed to be listed ever again. So the only thing that's available to sell is what's already on the market. How long would it take at the pace at which homes are selling for everything to be sold? Okay, so that's what that month supply of inventory basically tracks. And the idea is historically that a month supply of inventory of around 4 would be a balanced market. A month supply of inventory of 5 or greater would be a buyer's market. But what we've seen is the market has shifted so fast that even though the month supply of inventory numbers are currently at a 3.4, which would typically be a slightly leaning seller's market, we're pretty much seeing an extreme buyer's market out there right
because
now.
The inventory is increasing so fast.
Yeah.
It's almost like we're already to the point where it's a 6-month inventory. We just had so low of inventory that
it just feels so different because of what we kind of got used to over the last couple of years. So we are in a scenario where average prices have been dropping a little bit, not too dramatic. The highest average sales price that we saw was about $597, and it's currently at $550. So we've seen a little bit of a drop in average sales prices. The sales to list price ratio, we were seeing homes selling for an average of like 2% above the list price, and of course some homes 20% above the list price.
And now we're back down to 97.
Now we're back down to 97, 98%. So the people are negotiating. Many buyers right now that we're working with are actually getting concessions, which means that they're going in with their offer of whatever it is, and then they're also asking the seller to give them $10,000 back to help pay for their closing costs or buy down their interest rate or different things like that. So we're seeing some interesting things. But one thing that we noticed and we decided to research this morning was, okay, so we know the month supply of inventory for the whole market is a 3.4, but what is it in each area? Because it does feel like some parts of the valley are hotter than others. There's some areas where it feels like, homes are still moving pretty good there. And then there's other parts where it's like
molasses. So not moving at all.
So we kind of created a spreadsheet here, and it might be confusing to look at, but Terry's going to break it down for you and explain it all. So let me just share my screen with y'all real quick, and we will dive into it right here. Let me zoom in on this just a little bit because it's taking up so much of the page. Oh, well, I better zoom out one more. There we go. Okay.
Go ahead, really quick. So we're going to talk about these in the shortest amount of time to sell your home and month supply and inventory to the longest. And so we're going to kind of talk about that and review that. So Coolidge still looks like it's on fire because it's 1.88 month supply and inventory. So really affordable there, can move really quickly. So Tempe is next, 2.65, Mesa, 3.26, Florence, 3.35, Chandler, 3.52, Gold Canyon, 3.57, Arizona City, 3.58, Gilbert, 3.61, Casa Grande, 3.92, Scottsdale, 4.12, Apache Junction, 4.28, Queen Creek, 4.83, Maricopa, 6.96, Santan 5.29, and Paradise Valley 6.59. And so we were looking at that like, wow, this is so interesting. Everything's so different. And what we came to terms with was Coolidge is super affordable, and it's the same distance to downtown Chandler as Santan, where Santan's prices have risen to almost Queen Creek prices, but it's the same distance. So if you were looking for a cheaper home that you could commute into the city, you'd probably be picking Coolidge over Santan, because the commute is so much shorter and the same distance and so much more affordable.
Yeah, I mean, if commute was the only factor,
Yep.
right? So it's very interesting. We were pretty surprised to see, Queen Creek, Maricopa, and Santan Valley over the last 2 years. I mean, the whole market has been hot, but over the last 2 years, those places have just gone absolutely bananas. Like just nuts how hot those markets have been.
Exactly.
Right? And so now they're, one of the slowest. Obviously, Paradise Valley has a little bit higher month supply of inventory, but that's probably primarily to do with their price range than it is to do with the desirability of the area. Because I mean,
the amount of fighters who can afford that.
But if we could afford it, we would probably all live in Santan Valley, right?
Paradise Valley.
Oh, I'm sorry, in Paradise Valley. Yeah, that's what I meant to say. So, and by the way, we only looked at East Valley cities on here. Maybe in a future episode, we'll look at West Valley cities as well. So if you want to see your area, we will. We also, as you can see, we broke it down by price range just to see, hey, is there a significant trend by price range? And there's really not. I mean, obviously, 1 to 200 is probably a little higher, not because... Listen, everyone would love a home between 1 and 200, but what's actually available between 1 and 200 is so trashed that no one wants to buy
half burnt homes.
Yeah, half burnt down homes, basically. Okay, then 2 to 300, though, that number doesn't surprise me, only 1.4.
Exactly.
And then after that, it's all mostly kind of in the threes and doesn't start getting really high until you get over $1 million.
Yeah. But if you look at Coolidge, that's these two low ones, the 2 to 3 and 3 to 4. That's all Coolidge is.
So it has to do with the price range. But Arizona City's probably not quite. I don't know. I'd have to look at average sales price of Arizona City versus Coolidge, but I'm going to assume that they're fairly similar average sales price. But Arizona City's average MSI is almost double what Coolidge's is at 3.58. So I don't know. I think Coolidge is a good mix of like affordability and still within commuting distance.
Exactly.
Right. Well, we'll see. We'll keep an eye on it for you guys. And that's all we have for you today. So hope you found this information helpful. And if you have any questions, no, I didn't mean to do that. I meant to stop sharing my screen. How do I do that? Let's see, share, stop. There we go. So if you have any questions, or you want to know more about what the market's doing in a specific area, or you want to know an update regarding the value of your home, or you want to know how long it would take to sell your home, or just anything like that, hit us up. We'd be happy to help. And thanks again for watching.
Have a great day.